It is official, the stock market hates growth stocks. After last week, what an ugly week it was for growth stocks. Anything growth related, anything on the smaller market cap side had such an ugly week last week. I kind of didn't really realise until I actually went on my portfolio this weekend and looked at it for the first time for a couple of days and looked at a lot of my growth stocks and went, wow, that went down a lot last week. So many stocks that I own, stocks that I don't own that I just track because I like to keep in touch with them and see if some good buying opportunities come out of them. I looked at a lot of growth stocks and I was like, it is so ugly. Like this whole year has been ugly for growth stocks, but particularly this month and the last week was even worse. And it was actually getting to the point where you were looking at a lot of these growth stocks and they actually looked like they were moving a bit more in the right direction. And I didn't really realise how bad it was until I actually made this video on Patreon, which was an exclusive video which was about handling drops. Really good video actually. I think it was my best video that I've done this year. And after making that video and talking about handling drops, it wasn't until I realised that there's actually a few stocks that are just absolutely bonkers valuations, and then how disconnected the stock market is with growth stocks. Growth stocks are just massively out of favour right now. You look at some of the growth stocks and look at what they're doing, and you look at the stock price, it is ugly. They're going, 52-week close. And then there's some certain stocks that are just like, you're looking at them and going, how is that even up that much? Like how, you're looking at the other stocks and you're like, what is going on there? And some of the stocks that are performing well are stocks that I own, and I look at them stocks and go, even me that owns this stock, I'm looking at them going, the valuation is just at a crazy amount. So this isn't a video really that I'm going to actually give you too much information of like improving you as an investor. I'm just sharing something that I've noticed and a big disconnect that's just going on with the stock market in general. So if we look at some of the growth stock pain that's going on right now, look at Fiverr. I don't own this one. It is one that I'm really interested in. I talked about it I think last week. But this is like a 6 billion, 5.9 billion market cap. It's currently $162. It's at nearly 52-week close of $152. And just look at this year, a very good growth stock, but just it's not, the stock market, investors, Wall Street are just not interested in it. They're just not interested in picking it up. A company like TDoc, a little bit bigger, 18 billion, same again. Look at this, the stock market, investors, Wall Street, just not really interested in it. Zoom, once again, a stock here that is near 52-week close is 245. Once again, 250. Not really interested in it. A stock like Lemonade, you could argue that some of them might have benefited from the CV situation, but the stocks that haven't even benefited from the CV situation, a stock like Lemonade, and you look here, 3.2 billion market cap. Look what it's done this year. Absolutely nothing. 52-week close of $53. Look at Lemonade, $53. A stock that I own, Gang. Once again, this week, this is just. I'm looking at Gang, and I'm looking at what has justified in the last 1 month for it to lose 30% of its value. 500 million market cap, 52-week close, $10. It's at $10. It's at 52-week close, another growth stock. And there's just a lot of these growth stocks that are just massively out of favour, and some of them as well have done really good financials this year. Like Fiverr, I saw their earnings report the other day. Their earnings report was absolutely fantastic on the last quarter, and people aren't interested in it. Like Gang has pulled out 2 really good earnings, and just people aren't really interested in it. A stock like TDoc, a few people might say, oh well, it did benefit from the CV situation. What CV situation? If I cut in the share price right now, look at this, right? The share price is at prices it was before the CV. So anything it's gained financially from the CV, it's not even reflected in the share price because it's below, it's pre-CV right now. So for a few people that might argue that a few of the stocks I'm showing right now might have benefited from the CV situation, where's the benefit? I cannot see the benefit. And like I said, there's stocks in here that haven't even benefited from the CV situation that are just absolutely just fallen off a cliff. And then you go to the complete opposite end and you look at the likes of the big tech. Anything big tech related or big market caps, they're just going on and on and on runs. Look at Nvidia, fantastic company, but I look at Nvidia, look at this since September, 60% improving the share price, 60%. Let's go year to date on, let's go on Nvidia year to date, 151%, and it's a 825 billion market cap at 101p ratio. Now I know I'm still freeloading in my charts here, but I just want to show you this. Just look at this historic value on Nvidia on a P ratio. Look, it normally trades around here around this kind of like 40, 45, 50 kind of P ratio. Look at where we're at, 117. Look at the likes of Apple. I have never seen Apple at this sort of valuation, 2.6 trillion. Once again, you look at Apple, look at what these guys have done year to date, just gone on an absolutely crazy run. And once again, you look at the Apple's valuation. I mean, look at Apple. It's normally traded around here, around this kind of 16 to 20 P ratio, 28 at the moment, and it's been higher recently. So this has actually had a bit of a reality check, but it's still absolutely crazy high. And this is a company that hasn't even pulled out that impressive earnings. They pulled out the recent earnings, and look at this. The EPS was in line, the revenue missed, and it missed by 1.6 billion. And we've seen other companies that have missed earnings, and what we've seen with them sort of companies, they've just absolutely fallen off a cliff. Big tech can report earnings where it's a bit of a miss. It's not bothered on the share price. You know, we go back to $160, 52 week highs, $161. So we have big tech that reports earnings that we've seen a lot of these growth stocks, they report earnings where they miss, boom, absolutely fall off the cliff. Big tech comes out, oh no, we'll go to 52 week highs. Microsoft is a stock that I've owned. I've owned this stock since around about 2017. I think the first time I ever bought this was around about $80-ish, maybe $70-ish. And you know, this is a stock that's done really well, and it normally does tick up quite nicely. It's one of those stocks that you just, you know, one of those charts that's actually quite nice to look at. But there's some points that I look at and I'm just going, how is it doing this? Like, you know, it's up year to date 57%. Microsoft is normally like a 20-30% a year. It's absolutely crazy. And once again, you just look at this. It's just gone on an absolutely crazy run. And especially like the last kind of couple of months. You know, Microsoft's added 20%. You know, this is a 2.4 trillion market cap. It's added 20% in the last couple of months. And once again, you look at Microsoft, apart from this little blip here when they were, I think they're being quite aggressive buying a few companies out, if I remember rightly. I'm going back a few years now, but I think they were quite aggressive buying a few companies out. I can't even remember which ones it was back then. But look at this, you know, Microsoft's normally been like a 20, 25, 30. You know, we're up at 38 right now with this one. And it's just like the S&P 500 in general. I mean, I thought 2020 was like a bit of a crazy year. You know, we were kind of like, we were higher than the CV situation, and you were looking around going, yeah, we're higher than the CV situation, but you look at the economy now and you're like, oh, yeah, I mean, we're okay, but should we be higher? I don't know. And then you look at what's happening in 2021 and you look how high we are, you know, to put what we've done so far this year on the S&P 500, 26%, it's a lot. And the thing as well is you look at the S&P 500 and what it normally returns, which is, you know, 8 to 10% ish. I mean, look at this, you know, steadily over the last kind of few years. I mean, it's done all right, even probably a bit too good in the last kind of few years. But from here, I mean, the last kind of 12 months or just over 12 months have nearly outperformed what the S&P 500 has done in like the last 4 years. And it's just absolutely bonkers how crazy a lot of this big tech is, because a lot of the big tech is in the S&P 500, and it just keeps going up and up and up. And you think, why are people willing, or investors still willing to pay these valuations for these stocks when you've got all these other stocks at 52-week lows? And another stock that I own, which is Shopify, I mean, it's done really good for me this year, but I've got to look and go, how is it traded at this sort of valuation? You know, this stock has gone up a crazy amount, and this is one that you could argue has benefited from the CV situation, but has still had a good 2021. 63 P ratio. Look at the price to sales ratio. I mean, 50 times sales you're paying up for it, and it's normally down at a 15. And it just got me looking at the stock market and going, something that you thought was going to, I personally thought this rotation was going to happen probably a few months ago, and even now we're getting towards the end of the year. And you look at a lot of the growth stocks, and the growth stocks just haven't really been taken up. Nobody's really interested. Investors, Wall Street aren't really interested in growth stocks. You look at big tech, and that's where a lot of the money's going into. And you look at a lot of big tech right now, and you just see it keep going up, and you go, how long is that going to keep happening? It cannot keep going on the rate that it is going at right now. It's so weird to just see people willing to pay that sort of valuation for them stocks like Apple, Microsoft. I'm saying this about stocks that I own as well. You know, Shopify. You look at and you think, why are investors, why Wall Street buying them valuations? And then you look at growth stocks, and you're looking at growth stocks like TDOC that has benefited so much from the CV situation, but yet the share price is lower than pre-CV. And investors are like, oh no, I don't want that one. I want to go pay for Microsoft at the highest valuation it's ever been at 52 week highs. And it is such a weird disconnect that is going on in the stock market. So I wanted to make a video kind of talking about this and saying that, if you are in these growth, which I am, and it's what I've been buying a lot over the last 12 months, and you're a little bit like, what is going on? Because you are looking at a lot of these growth stocks and they keep going lower and lower and lower. And you're looking at big tech that keeps going higher and higher. And you're just looking at what is going on here. And there is a massive disconnect that's going on. Growth stocks are really hated by Wall Street at the moment. But it is a point of view, is like, how much longer can this go on for? How long can people keep on putting money into them big tech stocks that just keep going higher at crazy valuations? And then you have all these growth stocks that are doing really good. They just keep going lower. And I really noticed that after doing the video, and I've spent a lot of the time on the weekend just having a look at a lot of these different stocks and how they're all performing, and just such a broad kind of, the big tech in general, all of them are going on crazy runs. And you look at all these amazing value stocks right now, growth stocks that are nearly trading at value stock prices at the moment. They're just massively sold off. And I just wanted to kind of make that kind of video just saying, don't worry if you're looking at that and that keeps going up, and you're looking at growth stocks and they keep going down, and you're getting a little bit frustrated about that, because I am personally as well. I am getting a bit frustrated. But don't worry, because at some point it can't carry on having this disconnect going on. And one in particular that I keep using as an example is Hims and Hers Health. This is a stock that I've started buying in the last kind of 2-3 months. And if I go on the last year, look at the share price, right? We came in the year at $10. We did quite well around February time, and then boom, we just gone lower, lower, lower. Eventually I got around to here where I just started buying. I would say maybe around here where I started buying. And yeah, it just hasn't really done anything since I bought it. But what you're seeing here is that the stock's down at $7, right? And a year ago we were at $10. Now, if you look at a company like Hims and Hers Health, this company has absolutely destroyed its financials this year. Like, it's brought 10 out of 10 earnings this year. It keeps raising outlook. It's what it said it was going to do at the start of the year. This year, it's absolutely smashed it. And if we go on the last kind of like 6 months, I mean, look at this. We're $14, $15, and we're just downtrend. And even when we got round to September time, we were back up at like $9 or what have you. And then what happens? We've gone in the last kind of 2-3 months, we've gone down like 19%. Look at the last kind of 5 days, we came in around $7, $8, and then boom, we're even lower, 10% lower this week. And Hims and Hers is one that you look at. And they've hiked revenue up all year. They brought out earnings. Earnings are absolutely amazing. They beat revenue. 80% growth, and I think they were projecting at the start of the year something like 30% growth. You look at what they've done. They've announced they're going to add into Amazon now. They've announced another partnership with Walgreens, and this is going to add another 7,000 stores and online nationwide. And you think, okay, you've got Amazon coming in. You've got an extension to the Walgreens deal. You look at earnings. Earnings have smashed it all year. They beat expectations. They keep hiking up the revenue guidance. Very, very good company here. The lowest valuation it's ever been. And you look at the share price and go, what? You're looking at it going, it's lower than where it was at the start of the year, and this company has made so much progress. And then you're looking at other companies, and once again, I'm kind of dissing on a company that I own, and I'm looking at something like Microsoft and go, it's had a pretty good year, but does it deserve to be up 60% year to date, trading at the highest valuation it's ever been at? No, not really. And it just comes down to, I guess, when is the rotation going to happen? There's no way that investors in Wall Street can keep buying these big tech stocks and they keep going on these crazy runs. Like, it is good to have these big, this is why I never kind of time the market and why I kind of like sell out of stocks, because you don't know when the rotation is going to happen. So, I mean, Microsoft and Apple and all them, Shopify could still go up 20-30% yet. I'm not going to try time the market. I might protect myself and trim a little bit. But what's going to happen at some point is there is going to be that rotation. When is it going to happen? I don't know, because I thought it would have probably happened a few months ago, but it just keeps going. But at some point, the rotation will happen, because how long do you look at like a stock like Hims and Hers that's smashing it and go, you know what, I'm not going to buy it? At some point, that is going to happen with a lot of these growth stocks, and they are massively out of favour, and at some point, they will rotate into these stocks. And the thing is, the key indicator that we had recently is what we've been looking at with a lot of these small market caps is the Russell 2000. It's been in this range for so long. We had this little pop up and we thought, oh, here we go. The Russell 2000 is popping out of this range now. We're going to go on a crazy run. And what has it done in the last few days? It's gone down. It's gone down. And it's not a coincidence that the Russell 2000 has gone down, 3% this week, or in the last month since we got to the start of November, it's down 4%. that's an index. So as an individual stocks, you're going to be down even more, and you can feel it in your portfolios if you have any small market cap stocks. So we thought that rotation was going to happen, but clearly we're kind of stalled at the moment. But it will happen. It will happen at some point. But it's just all the kind of indicators where like, okay, that is it, and then it doesn't follow through with it. But what I'll finish this video on with is that it will happen. Keep looking at what is happening with your company. Don't stare at the share price. Follow the fundamentals, follow the financials. If you follow the financials, you will be rewarded, okay? So I'm going to go and take a bit of a history lesson. And a few of you guys might be around when we had this actually happen in real time. Now we count it as a history lesson. So some of you guys may know, some of you guys might not know. Greggs was my biggest position a long time ago, until, we had Greggs as my biggest position, and then a company came along called Boohoo, and they got into a bit of trouble with some of the suppliers, and then that came my biggest position. And then earlier this year, a company called S4 Capital came on, and that actually overtook it. But anyway, back to the point. Greggs was my biggest position in the UK portfolio in 2020 to about summertime. And then I think Boohoo nearly started taking over around there. But on the point is that Greggs is a weird one, because what happened is, this is how stupid investors can be. So it's 2020, the CV comes around, pandemic everywhere. Oh, how bad is this virus going to be? Everything's in lockdown. Peak fear out there. So what happens is the Greggs share price, boom, falls off a cliff. So you're looking at this going now, okay, Greggs has gone down 40%. Is it a buy? Potentially. So you start buying up all here. You start buying all this dip. And then you think, okay, we get around to June time. Okay, we've got news that, okay, lockdowns might be easing a little bit. The virus isn't as bad as what we thought. It's still obviously terrible, but it's, this kind of, at this time it was all unknown, how quick it was spreading, a lot of fear. This time we kind of got a bit of positivity that we were, okay, we still can pretty much go on day to day. And everyone kind of had a good idea what was kind of going on. And Greggs itself was just starting to get back to operation. So you're thinking, okay, all this period it's been shut down and everything like that, and now we've got a bit of, we kind of know what's going on, we know where Greggs is going to be. And then we have a dip like this. So you go down this much when it happens. Look how much more it went down afterwards in September time. A stock like Greggs eventually ended up going down at the peak 24% more than the CV dip. 24%. So it just shows you, when you look at that, people sold and it went lower. When we had a better understanding what was going on, Greggs was back opening up again. It didn't make sense. And when I made this video about Greggs, people were like, oh, why is it going down? Or Greggs is awful. And it was just like, no, because you look at what will happen is that the company's moving in the right direction. It's just investors being stupid. There's investors being stupid and selling Greggs off here when they shouldn't be. They should be buying. And it's one that I carried on buying. It's one of those stocks that I got a bit more of stick from, like, oh, why are you buying that? It just keeps going down. But I was like, don't worry, I've got confidence in it. And then look what happens, boom, we'll go up a really good amount. And it just shows you, with a stock like Greggs, it pays to have patience, and as well as that, the rotation will happen. There's people at that point that sold Greggs, and they will have regretted that decision. Why was Greggs going lower in that situation? It shouldn't have done. Everything's back opening again. We know where we're at with the virus, or we have a better understanding with it. Everything's back open. Greggs is making decent money again, and then share price goes lower. It doesn't make sense, but that's what happens. Sometimes people, investors, Wall Street, are a little bit stupid, and they don't kind of realize what's going on. And it's the same with what's going on now. At some point, Wall Street, at some point, there'll be that reaction of like, why are we buying big tech when we can go get a amazing growth stock at 52-week close down there that's at so much a better valuation? We should all go do that. Yeah, let's all go do that. And sometimes at some point that switch will happen. It's just a game of patience and waiting to when that happens. And that's why, rather than just focusing on, okay, where's the share price going to be next week, or is the share price reflecting the company? Is the share price of HIMS currently reflecting what's going on with HIMS? No, that's why you, as an investor, look at what the company's doing, look at the financials rather than the share price, and eventually you will be rewarded through that situation, very much like some of you guys might have been around here with what happened with Greggs over a year and a half ago now, coming on to 2 years, I guess. So just thought I'd make that video. So yeah, sorry it wasn't really much like informative and giving you information as much, but just kind of sharing what I'm seeing in the stock market right now, and a bit of an update with the kind of outlook in the stock market as well. So yeah, I hope it was useful. If it was, hit the like button, and I'll see you on the next video.